Hello and welcome to this quick presentation. Today we are just going to use NQ because we are not restricted to just trading ES, and we should not shy away from trading any volatile instrument because the rules of nature and rules of doing the right things don't change. And if things are pretty volatile, you can just go to one contract as we see here on the right side. Now this is nothing to do with any kind of chart. Here on the left side we have volume charts, on the right side we have Renko charts, and you can see the trades are being fired in the middle of nowhere. And other point is we just flip the trade when we know we are wrong. And these oscillations are helping us just give us the confidence boost. So one thing we have to see is using the volume charts which are on the left side. We are looking at a couple of things here in the homegrown oscillators for 369. You see this is a zero net positive oscillator, which means that you'll only see oscillations on the top side of zero. And the reason we do that is we want to see if the exhaustion is over and if there is a divergence in exhaustion, and also is there any divergence in making higher highs and higher lows. Now this is a very large chart, time frame chart, you can see. So the point is you need to understand the levels, how to trade. Rest, it doesn't matter. First of all, you see there are automatic polarity lines, we call them, or you can call them Gann true trend lines. The formulas are the key. You can present it in any fashion, it doesn't matter, because what we are doing is we are trading the formulas. That is why our accuracies are a little bit different compared to what we do, compared to what you do, because we know these formulas and we trade at those known levels. Rest is all just controlling your anxiety. All right, so let's just not talk too much, because the reason I presented these two different chart types is and also talking about NQ is we just flip the direction if we understand we made a mistake. That's the topic of discussion today, not how much money we can make. We can make huge money, huge. That's not the point. But understanding is the key, and then applying that understanding is the next lock you have to open with your key which you have acquired through understanding. So if you just want to talk about the oscillators, you need to understand the right oscillators, and oscillators when applied on momentum charts and applied on volume charts do a good job, because we want to get away from time-based charts to see the underlying structures and divergences, but these cannot be traded as such. So what we can do is we can understand the phenomena behind the scene, the true momentum, the true direction. If you suppress one component of 4 dimensions, here we are suppressing time. That means if time is just going and price is not going anywhere, the bar will not move. Right here in the volume, unless certain volume is transacted, it will not move. Same thing in momentum, until certain range or momentum has been accomplished, it will not move. So we are taking away that unnecessary chopping phenomena because the time is ticking and we can't control time, so why use it? So that's the whole strategy. All right, We will talk about all these true momentum and true divergence indicators a little later. I just wanted to show you in the spirit, since I just ended up opening this chart, let's talk about it anyways, before we go on to why we are here today. As you can see, this is nothing more than a Bollinger Band placed on the true oscillator. You can see here, which has been, obviously everything has been modified. So what is this telling us? This is a true momentum. It is telling us how strong is the move. It is also telling us how strong is your momentum. So let's look at this. This top and this top and this top. This is called a triple divergence. Why? Look at the momentum, true momentum behind the scene. Because we are not using time, the true nature has been exposed. At this point, and this point, and this point. At this point and this point, the momentum was lower, but this guy was higher. It jumped off to the next level. Now, don't get too excited about trading precisely at this level. The levels are very precise, you can see, because these are Gann secret levels, right? They change based on highs and lows. They change. All right, so okay, so same thing as here. Look at this guy and this guy, right? And compare. So these momentums should have been shifted higher and higher, but they are not. And then we get this oscillator trap on the Bollinger Band, and it goes outside and comes inside, and this is where we are shorting, and this is NQ. Do you understand? Perfect, thank you. Now if you see this one, this oscillator is also going up, but the color is different. It is telling us the momentum on the downside is now increasing. See this one? So, and this is going down. It is telling us that the up move momentum is over and the downward movement of momentum is starting, and then it is getting much more stronger on the downside. So we will discuss that a little later. When it is in the middle of nowhere, market is going sideways. That's right. You can see here, boom. See here, right? All right. But we are interested in all these divergences, and also when you have taken off two STDs away, standard deviations away from the mean, and there we go. So that was a good trade. Rest of the time, this was another one. Now this one, you should be able to take a loss, right? But if you look at this oscillator, it was not telling us to go long, even though this one is saying to go long. This is saying it's middle of nowhere, which means it can go either way. So you have to be cautious. So what do? This is what we do. We flip. If I'm wrong, I flip. And always just remember, you only have 50% chance to be right with all the information you have at hand. So if I was going to go long here, because of this information, I never go on the market. So it was right here. I'm waiting for it to take me in. Right, this is pretty wide, but these are shorter ones, but you got the idea. Because behind the scenes, what this is trading is behind the scene formulas, which are not even shown here, right? For a reason. Anyway, so if I want to take a long, it took me in, then it flipped on me. What I do? I'm looking at this momentum is going strong on the other side, so I will short the double. Boom. But here I'm just trading one contract, but you got the idea. Boom. So that you should be ready to not get emotional. Oops, I picked the wrong direction. There are 100 million people doing the same thing and billions of dollars trying to do the same thing what you're doing. So don't worry about your $100,000 account, right? Making a wrong decision. Just flip, go with the flow. And this is telling us that flow. All right, this one, and then with everything is controlled, right? So right here. Now, let's watch this. This low and this low. And if you compare, now you have to compare the reds, low, bottom, bottoms, we compare the reds. Now, this is used for exhaustion on the other side. This why it's a little bit different and difficult to understand what I'm trying to say now. But you understand this is going lower low. But what has happened here? This has also gone lower low actually, if you think about it, right? But at the same time, it is also giving me indication of this could be an exhaustion. It has flushed down a lot. There are couple of more oscillators which I'm not showing, which is linear and non-linear relationships between momentum. This is just giving you the idea about basics. Now this is going down, that means the downward momentum is ending. Exhaustion may be ending at this point, right? Starting from here. That's why we just don't take all the levels. We need to make sure that dynamically things are over. But as you can also see here, when this is exhaustion is set up extremely, what happened to the oscillator of interest? This momentum oscillator applied on the volume charts, and obviously these are the 50. If you want to use momentum bars, use 50 momentum bars. This is going to slow down your thought process. And then if you want to use volume, use 144,000 volume on NQ. It will become extremely slow. And this is where will the magic be exposed to you, right? So here it went out and went out, went out. I have to wait for it to come inside and close. It happened here, you're long. So you can trade with pure technical analysis, but not the way it is designed in the public space, right? So if you want to take short, this has to be red. Take long, this has to be green. Take short, this has to be up and moving down, right? Doesn't mean it's gonna happen. This is like quite a jump. Let's see, how much is it? 40. These are 45-point jumps. 45-point jumps. People are looking at 5 ticks. This is 45 points. This is, you have to think big. And this is just faster moving charts. Maybe it makes 5. Now we are long here since then. For this reason, you can see now. Okay. All right. So here I gave this side lecture because the screen was open, so I thought maybe we'll just talk about it as a bonus. So now let's go and talk to our real business, why we are here. So here I have placed 3 different oscillators. When I say oscillators, not the traditional oscillators, I'm talking about the oscillations of the price. And they're represented in a different fashion. The independent videos for all these 3 tools, which we just have to click and drop, and everything is fully automated. Everything you see here is fully automated, and we are superimposing Rankos on price and trend change boxes and triangular zones. All right. Sorry, it's been a long day. So what we have done, we talked about it in the last few videos about all these tools. So now we're gonna just put it together. And I'm not going to spend too much time because we have seen this. This is a 3-minute chart. And what is going on here? You need a methodology, and you can stick with that. And so you can start seeing the patterns. You can train your mind. This is completely automated. If it is fully automated, what is your job? Simple. Learn the 3 rules and stick with the execution. And you can do not mini, you can also do micros. Do a micro. To prove yourself, you are able to follow the rules. And then it's add. This business is so easy to scale up. Adding 1 contract, 20 contracts, 50 contracts 30 contracts, making $10,000 an hour. It's all possible. What is the gap is finding the right structures and approach to trade. And this is not the only way, but I'm showing you the natural phenomena because this is level 2 coaching. Level 1 coaching is what we already discussed. So forecasting the entire year, we have done it for 18 months. All the highs and lows for the whole year, 7, 8, 10 highs and lows. We can predict hourly basis, 4-hour basis. This is going down deeper at the micro level of execution. Analysis can be done quickly, very easily, right? Before market opens, you have to get up 2 hours early, do your work, set up routine, healthy workout, meditation. More you meditate, more you make in this business. This is how this goes. All right, so back to business. This, this is Rankos, which is pretty straightforward. And then you see boxes showing up at different points. We are trying to track the algos. We're going to use these boxes to put entry, stop loss, and target will be the box size times 2x and 3x and 4x. So what is our strategy here? Strategy is pretty straightforward. Now, third part I forgot to mention. What is this triangular, I apologize, this triangular zones. All right, so this time segment, watch the previous videos. This triangular time segment is projected in the next time segment. All we are trying to do is find out the volatility ranges, and we use that to trigger the breakouts. All right, that's it. So there are 3 simple things. Just click, 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 drop. They're ready to go. Now what to do? Now this is 3-minute charts. You will see, you should check it out what to do around 8 to 9 and see how things are in terms of volatility. Now if market is moving, this is the easiest way to do it when the London opens, because they slide slowly. When it is going sideways, it's sliding. What is the entry here? It's pretty red going short. What happened here? Boom, short is one below this is a short. And where the stop loss is, depending on which box you use. If you use the shorter, smallest, be ready to be stopped out once or twice. It's okay. Use a bigger box, 2 ticks above this, and you let it go. That's all you need to do. So you got 50 points early morning. Okay, great. If you come to office at 9 o'clock, this business is not 9 to 5 business, unfortunately, especially if you want to get to 7 figures a year. You have to get more accurate and precise. This is still the phenomena of getting you to micro execution, precision execution. Still, there's no 100% warranty on success on a given trade. All right, so just realize that now this is where the boxes are there to give you the comfort that I will stop here. So I need to see, first of all, where is my stop? If my analysis has given me the bias to go long, right, based on C54. This is C54. We have projecting this low. If this is the low range, I'm looking for longs only. So half my problem is already over, that I'm going to go long only. I may be wrong. I may get stopped out. So that 1 hour and 4 hour analysis has already happened. All right, so I think you can watch the video on C54 on 365forecast.com YouTube channel. C54, right? That's where it is. So we know the reflection points. Maybe I'll show it in some other fashion, the entire portfolio of analysis. But for now, So I have this time coming, critical time, focused. I'm focusing from the last 2 hours. I'm looking at this news. There's nothing super life-threatening news. And if it is, I will place my orders on both sides. And we know that we have already given that analysis in the 369 forecast videos. First impulse, you can always go against it. First impulse, you can go always against it with 70% positive expectancy based on 20 years of historical data. So first impulse, they will go on the other side. You can just go. When the news comes, they'll go. Big news comes, they go this way, that way, right? So then they finally take a direction. So first impulse, you can short. First impulse, it goes down, you can go long. But this is a normal day. So we have 3 boxes which are wrapping 3 bars. Now look at this. What has happened? Look at this trend line coming in from the time segmented trend line. So what I'm looking at here, now this is projected in the next segment for a reason, for that reason. Okay, this time in the bottom, the vertical bars will shift day by day, day by day. They're dynamic lines, they shift. And you can slice them the way you want it, but this is natural phenomena. So let's keep it like this. Then what do? We have 3 simple approaches. When this segment starts, it starts with this guy on the negative side. Our triangle is here on the top. Let me just draw it. Our triangle is here. I'll not go all the way, so not to overlap things, right? This is the line. We broke here, but this triangle is not formed until you enter this bar. So triangle is sitting there. Let me just draw it like this. Okay. So if it went down, the first thing would be that, okay, it'll come up and retest and reject. I need to see the evidence. But here, what happened? The bar became very strong and zoom, went all the way. Even though the Renko is saying the trend is down, Renkos are delayed bars. They are good for having an idea of, like, once you're in the trend, to stay in the trend. When the trend is flipping, green, red, this is where you have trouble, right? This is why we have this methodology put in place. You can see that turning green, turning red, turning green, turning red. So opening London, eight to 10 in the morning, 11 maybe, and then around 1:30 to 2:30, 3 o'clock, you should be able to experience the volatility you are expecting. So what do we do? All right, so this one did not happen. So my first philosophy was that let's take maybe a picture of it so I can draw on this. The probabilities. What is the probability? Okay, market, this line started showing up here at this time segment, and we are here. You can get going. First probability. The second probability is it will go up, reflect. Third probability is it's going to blow on the other side. There's only 3 probabilities of this triangle. So I want to make my decision. So this is still red, still red. So let it come up and bounce a little bit. It did not. It just went in strongly into this. So if I want to go short, this box came on the red initial bar. So it has to come back below this line to take me short. It never came. Stayed there only. Then it closed this. The way it opened, boom, opened here. It could have gone non-stop at this bar. We don't know, right? So this box is over. Now the second box came, still on the red bar. Close is still on the line, precisely on the line. So there's no close above the line yet. Okay, what next? Next bar comes. So when this box is here and this box is now this box is inside this box, inside bar. Remember, bar, you should know these patterns, right? Just because I have a box inside a box, since it is wrapped in a bar, it is still a bullish engulfing bar, right? So if this is a bullish engulfing bar, what we know about bullish engulfing bar as a trader, it can blow out hard on both any side. So now I have a better evidence. Okay, it got rejected and I have a box. Next bar came. Now I am excited to put my long here, and short here I already talked about. That's about it. So if I get triggered into this long, where's my stop loss? Below the box. And it never came here. It never came here either. So this is how we can even tame NQ. So it's very important that it should become second nature. That's all there is. This is an inside bar box. Blowout is coming. How about this guy? This green box has same pattern here also. Blowout is coming. Which side? I don't know. Do I care? I do care. If I have finished my analysis, then I'm going to go long or short. But inside bar rule says whichever direction the breakout happens, you go with this, right? Now, even though the Renko was saying the Renkos are just retesting the Renkos, but the inside bar takes over and blows. And then if I do my analysis here, this is another C54. So let me put the C54 if you guys have not seen it. We have been talking about this for a while now. So let me put it here. All right. So I activated the tool. I'm not showing you the extensions right now. Okay. Because this is for folks who are engaged in trading. So there are so many lines here. Let me fix it and I'll be back. All right, I think you have seen the videos earlier. You can watch it. C54. I can't show you the measurements. That is part of level 1 professional coaching program. And all right, so this is the trend line, and this is the hotspot I used. And it's telling us that market is going in this zone for reflection. So you're coming off that C54. Now what is C54? You have to understand Gauss, square root of 9, 180 degrees, circles. But is the beauty of all this is all automated in thousands and thousands and thousands and 15 years of coding at few clicks. Click 1, click 1, click 2, that's it. So you can focus on trading. There we go. So we are already going to be reflecting from here. We got an inside box. It's like inside bar. Go with it. So you went there, enjoyed it. If you made your 50 points, get out of it. Why you have to trade New York Open? But if you have to, feeling bold and beautiful, inside bar. Same logic on the other side. So that is what is going on. Now all these formulas are given to you, taken from extremely highly professional models, and we are trying to bring it to retail space for select few who wants to go pro. And it takes time. Right? Minimum 90 days to get and to understand what we are saying, and you can see it in real life. Then it takes 90 days for you further to understand and trying to trust and see the applications and mistakes you're making and perfecting your art. Then reach a certain Zen state where you can make $50,000 per contract per month. It's a process. Unfortunately, no easy way out. Now, obviously, you can find some sophisticated auto trading tools who can change your life while you sleep, all those things are possible. But we are helping you understand the real precision dynamics of trading, and it can be achieved. It'll take years, and it will take 6 months to shift from your retail mentality into the positive zone. The next 6 months from there into mastering those skills, and then your brain has shifted. It has transcended from a given frequency to the higher frequencies. And then after that, you go to phase 2, level 2, where what I'm showing you is 10 automations. Pick a couple of them. You can forecast, you know what to expect. Sunday opens, what to expect. You have mandalas, target what to expect. So you have reached that state where you understood what is vibrating the market. And then you start looking ahead on the right side. The money is on the right side, not here. Right? My trades have no meaning to you because my mind is not your mind. And what has happened here has no meaning. It may be just having some meaning here, double top, but double bottom, but only in the context of loss of momentum and exhaustion and how they are flushing people out. Beyond that, is anybody's guess. So I hope this helped refine the ideas, because you can apply this on anything, any time frame. This is, I think, a good approach to look for when the volatility has compressed, because then the triangle, I can't say triangle today, sorry, I apologize. If the mouth of the triangle if this triangle is compressed in the next zone, you should be excited about it. If the boxes are coming all together, big blowout is coming. Okay, now this triangle is very large. If, as I explained in the last video, it is too large. So what does that mean? You can just use it as a flip on the other side kind of trend line scenarios. But again, the boxes are still coming up. This is now exhaustion zone. But this is also giving you the idea of volatility. In level 1, you also know this is a very critical genetic bar. Inside the genetic bar, you have algo boxes inside the genetics bar. Remember that. This is the genetic bar. Inside that, now you can trade this as a synthetic box inside a box. The 3 boxes inside a bigger box, synthetic box, right? And then this box actually literally have this. You can't see it, start seeing it, right? This is the big box. Inside that, insider bar box, breakout of the, how do you play inside box or inside bar, inside bar? You don't put it here or here. You could if you want to maybe get chopped a few times, but this is the exit. So here in our case it's a outer box. When you put a buy order, it takes you in any direction. All right, I think that's all I had to say for this week's quick session. Thank you so much.